Esteran, and I'm Vice President and Head of the Miami office at Council of the Americas. Today, we're honored to be hosting Gaston Irigoyen, co-founder and CEO of Argentine fintech Pomelo, and Ana Cristina Gadala Maria, principal at QED Investors, for what will be a very engaging conversation on Gaston's journey as an entrepreneur in the fintech space, his vision for the future of Pomelo, as well as what comes next for Latin America's fintech landscape. Today's conversation is part of our year-long Bravo Leadership Forums and Young Professionals of the Americas initiative. The Bravo Leadership Conversations have become our signature engagement and dialogue platform for bringing together Latin America's business leaders to promote cross-industry collaboration on key issues impacting the region. At the Council of the Americas, we're proud to provide a space for leaders to engage in forward-thinking and inspiring discussions on the most important issues driving growth and development in Latin America. Today's speakers represent the great talent, knowledge, and potential that the region holds, and we can't wait to hear their thoughts and perspectives. To conclude, I want to thank our 2023 Bravo Leadership Series sponsors, Bank of America, the Jeffrey Group, the AES Corporation, Pfizer Inc., Grupo Mariposa, Chubb Latin America, MasterCard, Moody's Investor Services, and Salesforce, as well as our media partners, America's Quarterly, Bloomberg Linea, and CNN en Español. Additionally, our YPA sponsors, BMW Group and Diageo. And with that, Ana Cristina, the floor is yours.
Great, thank you. Well, thank you everyone for joining us in Council of the Americas for hosting this conversation. I'm Ana Cristina. I'm, as you mentioned, from Guatemala. I'm part of QED Investors. For those who are not familiar, QED is a venture capital fund focused on fintech globally, and I'm part of the Latin America team, where we lead investments in early stage startups in the fintech space. So we've been investing in Latin America since 2014, and we invested in Pomelo 2 years ago when they first started the company, and so have been sort of part of Gaston and the team's journey since then. So I'm excited to share this space where hopefully you can learn more about Gaston's story, our passion for entrepreneurship, and why we think the way to transform the region is really through innovation, and where we see potentially the future of fintech and the region as well. So with that, I'd love to start the conversation and ask Gaston to share a little bit about his story. I know you've been an entrepreneur for a while in sort of various capacities, so maybe you can share with us, a little bit about your journey, kind of where it started, and if you can weave in, why entrepreneurship has always kind of called to you. That would be a great place to start.
Yeah, of course. Well, thank you very much for having me. It's a real pleasure. And yes, you said, I had the opportunity and the pleasure to spend my entire career in the technology industry. I came in a little bit by coincidence. I studied international relations, which, in principle has kind of nothing to do with it. But I was very lucky that when I came out of school, Google was landing in Latin America. And so I had the opportunity to be one of the first 5 employees for Google in LATAM, a very young and entrepreneurial Google. I did spend 6 years there, 3 building the operation for Spanish-speaking Latin America, and then 3 in Europe building the YouTube business. And even though that was an already public company, it felt like like 2 startups, one in LATAM and then one in Europe. It really had that sort of entrepreneurial DNA, and it felt super exciting, right? And so at some point I decided, okay, I'm going to try myself and start my first business. And that's what I did about 12 years ago. Started that company out of Dublin in Ireland. And it's been a one-way journey, right? I've been involved in several, companies, had the opportunity to sell one of those to TripAdvisor, another one, in the Valley, then built a neobank, and actually based on that experience, decided to pursue this opportunity around financial services infrastructure, because I thought it was, orders of magnitude sort of larger based on the size of the pain that we went through, building a neobank in Latin America. I'm not that experienced when it comes to financial services. I really started about 5 years ago when I had the opportunity to start building this neobank. My co-founders and many of our team members are really, much more experienced than myself when it comes to fintech. But yeah, it's, in retrospect, it's been a real pleasure. I think, entrepreneurship is much needed in Latin America. And, I decided to come back to LATAM and, in my particular case, to Argentina, to invest in the region, hopefully try to, move things forward. And, it's been a real joy, and it's great to see, all the momentum that we finally have. It feels like, entrepreneurship has been around in LATAM for a long time, but now kind of after 25 years in the making, it's really starting to make a difference and to boom and to be in the spotlight in many ways. Yep. Super thrilled with that.
Yeah, no, that's great. And so, you worked at Google, as you said, in Naranja X, you were sort of an executive leading the company.
Yeah.
And you could have stayed right at those sort of, at that point, corporations, and sort of taken a different path. So why did you choose to start your own company, and sort of what is it about entrepreneurship and starting your own company that attracted you?
Yeah, you're absolutely right. For the last 12 years, I had a couple of experiences. I always felt like I was, building businesses. It's true that it's been in different capacities. At some point, I was, founder and CEO. Then I was, part of a leadership team. And then, Naranja X, I was sort of CEO from the first day. And I really felt like I was a founder. Technically, I was not, because this was a spin-off, and we built this kind of neobank within a very large financial institution in Argentina and in Latin America. But I think the overarching feeling for me was that regardless of the job title, or, whether it was I was like a founder and kind of shareholder from the first day and so on and so forth, or not, I was always really kind of building and starting businesses. And to me, that was the most important thing. If we go back to Naranja X, I had the opportunity to build a company that was sold to TripAdvisor, and then I wasn't really sure what the next big step would be for me. And in many ways, I was also kind of tired of that experience. And, based on previous learnings, I wanted to make sure that whenever I was going to start a business, I was absolutely convinced that was the right business and that I would do it for the rest of my life. And this opportunity came up, and I thought, it's a good way for me to understand and to get involved with fintech, which is obviously like a big theme that I know very little about. And at the end of the day, I will feel like I will, be a founder. We built a neobank from the ground up, and it was an amazing experience. And then at some point, the rigor of the corporation, kicked in, and, we went through this process of merging with a sister company, and I started, to see more of the more traditional business and the digital transformation and the mindset of, more traditional financial institutions. And at that point in time, I thought, okay, this has been an amazing experience. I can wrap up this experience in a very nice way. Today, that company has like 5 million customers, has like 2,500 people. It's in a good place. It's headed to in a good direction. But also, it was very clear to me and to one of my co-founders who built the neobank with me that this opportunity around infrastructure was orders of magnitude larger. So we thought, okay, now it's the right time, and let's go pursue this. Now, back, as formally as a founder.
Yeah, no, that's great. I think that makes a lot of sense. And so maybe for the audience who's not familiar with Pomelo, tell us a little bit more about, I mean, you mentioned financial infrastructure, and I'm happy to share sort of our perspective too on why we invested and why we think it's exciting, but would love to hear what is Pomelo and sort of how did that vision come about?
Yeah, of course. Yeah, so we describe ourselves as, financial services infrastructure for Latin America. What that means is we are effectively sort of behind a lot of the, consumer products that we use on a daily basis, neobanks, crypto wallets, more traditional sort of fintech wallets, or even embedded finance plays. So sometimes we see all these retailers offer financial services, or even like the gas stations offer financial services, or we're starting to see some very interesting use cases in Latin America, such as commodities like literally soybeans and corn beans being tokenized and then used in new clever ways for industries that are massive in the region and have always been. And so we power that, right? We're kind of the backbone behind those services, most of which are B2C, but some of which are B2B as well. If we think of, this new sort of corporate cards that are being sort of offered, to companies, we're also sort of powering them, right? We do a lot with card issuing processing, but we also have some banking products. So, powering these companies with sort of virtual fintech accounts, and then, cards products that they can offer to their users and customers to transact. And the reason for building this company is that, we had this experience building a neobank. One of my co-founders was very early at Mercado Pago. He was the third employee in the history of Mercado Pago, spent 12 years there scaling Mercado Pago to Brazil, Mexico, Colombia, Chile. And my other co-founder was serving the fintech sector at MasterCard. So we had all sort of seen, the space and the problem from different angles. And effectively, the challenge that we had faced is that when we were building all these companies, we would spend roughly 2 years to land and launch in any given market. So if you think about like the leaders in the region, Mercado Pago, Nubank, Walla, all these companies, it took them literally between like 6 and 10 years to be able to launch and effectively, serve like 3, 4, 5 markets. And that's because of the complexity around Latin America. Not only we're dealing with legacy financial services infrastructure, but also we're dealing with different regulations, different market maturity, different market needs, different use cases. And it's effectively really difficult to be able to serve all these countries and say, hey, I'm covering, 80%, 90% of Latin Americans' payments volumes or inhabitants or whatever that may be. And we thought, there must be a new and better and more efficient way to tackle this region and allow for, faster expansion and deeper sort of value propositions. And so we are effectively building the first ever regional infrastructure so that, all these companies can serve the entire region in a seamless fashion. So if you think about how it's done in Europe, for instance, where you have, more than 20 countries sort of regulated by the same central bank, by the ECB. Well, now you may argue there's two, right, with Brexit, but you can effectively launch in an entire continent, in a relatively simple manner. And, as we know, we probably we will never have something like a Latin American central bank, right? And we will always have, all these challenges. And so wouldn't it be great if, we could expand our businesses throughout Latin America the same way they've been expanded throughout Europe? And that's in many ways our vision, right? Now, to make that or to bring that to fruition, there's a lot of complexity in the back end, and our work is to sort of level the playing field and make it a lot easier. So that's kind of the thesis around Pomelo. In a time where more and more companies are becoming regional companies and there's more tech penetration in the region, all these companies need to tackle and to increase their TAM by having a presence in the entire region, right? Like 1 or 2 markets is not enough anymore. And so, hopefully they can find a fintech partner within Pomelo.
Mm-hmm. Yeah, that makes a lot of sense. Yeah, and I think what's been interesting, kind of seeing your journey and how you built the company, is that you decided to go. You're in 5 countries now, operating.
5 countries.
5 countries. Yeah, you decided to go sort of 5 countries at once, building that infrastructure. To your point on sort of how do we build the platform from day one versus other companies that sort of start in one country and then expand to others, which I think, makes your job harder, right? Because you sort of have to build a team on the ground in each country. You're very much kind of regulatory focused, right, to be able to have all of these fintech products. But I do think it creates this, it makes sense with your thesis in terms of the infrastructure that you're building, and allows your clients to sort of scale from day one. And so maybe you could share just a little bit of what kind of the profile of your clients is as of now, and sort of who you work with, just to get a sense of the use cases a little bit more.
Yeah, no, I mean, you're absolutely right. I mean, I think we took a rather atypical path because, usually with startups, you try to launch like one product in one market, make sure it has product market fit, and then grow from there. But we always knew that our thesis was a regional thesis, and to actually make a difference and to add real value to the market, it had to be regional from the get-go. And in many ways, it was a long shot and it was a big bet. I don't know, I'm assuming probably when I told you the story for the first time, you were like, why would you go to 5 markets like within the first year? But we had a very, very high confidence level about this thesis. And that's what we did. And in many ways, I think our story has been sort of interesting because we sort of challenged that status quo a little bit, and it was unthought of that you would be able to operate in like 5 and hopefully 6 markets so rapidly. I still remember when we first started, and the news came out in sort of the Argentinian fintech sort of landscape, or more like the more traditional financial services sort of industry. People were, okay, sounds good. It will take you 2 years to be operational like in one market and to get your first sort of card payments through. And we're literally turning 2 years old next week. And we are in 5 markets. We're serving over 100 customers, 7 or 8 of the Latin American unicorns, the likes of Story, Bitso, Rappi, so we work mostly with tech companies, VC-backed tech companies of all sorts. Some earlier stage companies that built their entire value prop on top of Pomelo, which is obviously super relevant to us because it's indicating that there's a new, better way to do this, and that they are relying on our infrastructure the same way they rely on, say, Amazon Web Services to build their value prop. And then as we move sort of upstream and to like more established companies, again, like the likes of Bitso that QED backs as well, and our regional companies, and our market leaders, or Rappi or Story, which is very relevant in Mexico, and I assume that at some points they will want to become regional players. The fact that they can rely on us, and they rely on us to launch their cards throughout the region, it's also very rewarding to us. I think that's kind of our sweet spot. It's like fintech, crypto, around card issuing processing. Yep. But then we also have more traditional companies, digital transformation companies that are working with us, and we're starting to see all these like amazing use cases from very large traditional sort of industries in Latam, as the example that I was giving about agriculture. So, for instance, we have this company or this customer called AgroToken, and they effectively tokenize digital assets and commodities, like literally soybeans, corn, bean, and tomorrow they will do like energy and literally land. And so they're tokenizing these assets. There's a third-party custody. They're giving a card to the producers, and the producers do not have to sell their commodities to have liquidity. They can go use their cards, and then if for whatever reason they default on their payments, then the third-party custody is selling those soybeans at market price to pay for that sort of balance. So these are very, very interesting use cases, sort of game changers. In this case, in agriculture, which in the case of Argentina and Brazil, has been probably the number one industry verticals sort of historically, right? So excited about that.
No, that's great. And just to chime in sort of from our perspective and on the thesis, I think what we were most excited about when we invested in Pomelo is, as I mentioned, we've been investing in fintech for the last kind of 15 years, in Latin America for the last 8 years. And we saw kind of firsthand our portfolio companies, how much they struggled to launch, these products that now Gaston offers kind of as a service, Gaston and Pomelo. And sort of how, to your point, the pain point was so great and the friction was really high in terms of being able to launch products where it takes you not only significant time, but then it's costly, right? It takes resources. And by the time you launch it, you probably already changed your mind about the product that makes sense in the market, right? So I do think we lived firsthand through our portfolio companies and through seeing the opportunities in Latin America, what that pain point was. So as soon as we met Gaston and the team and sort of they painted their vision to us, it immediately clicked of, we've known that this is a need for the region for a long time. And to me, what's particularly exciting is just what comes next, right? Because I do think it solves problems for, people that were already building fintech companies or thinking of building a fintech company. But now I think it also just lowers the barrier for those that want to start incorporating fintech products into their companies, whether they start as fintechs or not, right? So this whole idea of embedded finance, I think is really exciting in Latin America, because I think what you're doing is a huge benefit to the ecosystem in terms of catalyzing more innovation, right? Because now instead of where you look at in the US, you usually have like plug and play solutions if you want to build a company. Usually you have infrastructure you can build on top of, like different rails. And I don't think we have that yet, or we didn't have that until Pomelo started to build it. But I think that, and that's not just the case for the products that you build, but just in general, right? I think there's still a lot to do from an infrastructure perspective in Latin America. And I think that will sort of catalyze the next generation of startups, in my opinion, in QED's opinion.
Yeah, no, I agree 100%. I mean, as you know, in that time, we still have like very structural problems to solve. And so, like we see this in different realms, like, think of education and, any given sort of, family in Latin America is worried about their kids effectively finishing like, secondary school, not even, uni or a master's degree. It's just like, let's make sure, they finish at least secondary school. When you think about healthcare, there was a time where, it took, like a full year to get the first COVID vaccines, right? Probably something that, you did not experience here in the US. But yeah, it was difficult. And when you go to financial services, we have a lot more structural problems than most, countries and markets out there, right? Like, we're talking about cash economies. We're talking about like real inflation, like now like 7-8%, which is already like causing a lot of disruption around the world. But, like Argentina just crossed like the 100%, inflation, and there's countries with 20-30% inflation. That's been the case for like decades, right? Like even if we think of Brazil that now has it under control, there was a time where they had a lot of inflation. Same with Israel, which is obviously not Latin America, but these things are kind of our daily lives in Latin America. And so the point being is that we still need to tackle like very, very structural problems. And when it comes to financial services, people are they have a hard time finding a job, and then they have a hard time paying the bills throughout the month. And if they manage to save a little bit of money and they do not know how to invest it, then because of inflation, the following week or the following month, it's worth a third or half or whatever that may be. And so we need to power the region with an infrastructure that allows for different parties to build, better, more and better financial services, so that people can make a better use of their money and their finances. But it's not only people; it's also like companies, especially small businesses, right? And they're struggling, and they need sort of systemic help, if you want. And so I think that's the real opportunity, and the real motivation for us is really how do we help the entire region to make progress, at least in one of these core sort of verticals, right? I think that's probably the reason why I decided to come back and live again in LATAM and say, okay, how can we contribute to this in a more sort of systemic fashion? And the fact that we can do it for an entire continent, or at least, the 5, 6, 7, largest economies, it's very rewarding. But it's going to probably take another 20 to 30 years, right, to get to any meaningful point. So, yeah, it's only the early days.
Yeah, no, a lot to grow, but that's what makes it exciting as well. And I do think, especially because, we live and breathe fintech, but I realize that fintech is only a portion of sort of the challenges and opportunities in Latin America. But I do think, the reason why it makes a lot of sense, what you're saying is, the banks tend to be, they're very concentrated, right? The banking industry in Latin America. And I speak of it as a region, but obviously, each country is different. Regardless, there are similarities, right? Of just like the banking concentration. And so when you think about, and the way we think about the opportunity as well in LATAM is that there is really very little incentive, I would say, from traditional financial institutions, or there has been historically, to provide easy access, to provide lower cost products, to democratize kind of access to their products, which is why there's also sort of this lack of trust from a lot of customers in Latin America towards financial institutions. And so I think there's not only sort of an objective opportunity here, but there's also a real demand from, both the customers and businesses, a real frustration with the system and with the products that are available to them. And so my hope and belief is that with companies like Pomelo, we're starting to kind of fuel a little bit of that fire within financial institutions as well. And I'm curious if you have sort of any comments around, how you guys work potentially with more traditional financial institutions or banks, or if you've seen any reaction kind of from them.
No, absolutely. I mean, we're starting to work with more traditional FIs and with banks. Usually what we see, of course, I mean, well, there's several sort of angles to it, but they need to fight back, with all this very successful fintechs that are making lots of progress. And originally they were sort of, tackling into an opportunity that FIs were not interested in, through financial inclusion and all these kind of things. But, slowly but surely, they've started to eat their lunch a little bit. And so they need to fight back. And that means that they need to go faster, and they need to start creating all this sort of speedboats or, new products that, can really compete, and that, and the way the path or the playbook that they apply is like, let's try not to leverage, the existing capabilities and the bank's infrastructure, because sometimes, you're using like, on-prem servers or COBOL technology or those kind of things, and it simply doesn't give you the velocity or present or future velocity to be able to compete with all these fintechs. And so they start creating all this, speedboats, as the consultancy firms call them, which are essentially like spin-offs within these large FIs, where they bring like an external CEO, more of a like tech entrepreneur, and give them some funding to build this. This value props. And so that's usually the way we get into these larger financial institutions. It's usually through market expansion or through a new product or something like that. And then, start to, work our way into like the more, traditional and core stack. It's almost like if you think about like, cloud and how, it's been taking like 10 years to replace like on-prem. It's not about, hey, let's switch from one to the other, from one day to the next. It's okay, let's get in, let's show you, where's the value, how it's more cost efficient. It's even more exciting for the people that work in your tech team to work with, these new technologies, and then, start, sort of changing the share within the organization. And it will probably take, literally like 10 years before the entire bank, changes their infrastructure. Also, bear in mind that in Latin America, a lot of the, of the existing processors, whether it's on the issuing, the acquiring side, were built by the banks and for the banks, 30 to 40 years ago. So they would get together, build this sort of conglomerates, which was effectively 1, 2, 3 new companies with a new name, but they were the shareholders, and these companies were serving them and only them, right? And some of these, it it's interesting because some of these cases went through like Supreme Courts. They had to literally break those monopolies down because there was no competition. But even if we think about, where's the fintech industry sitting, it is in fact sitting on top of that legacy infrastructure, because when Mercado Pago was built, when Walla was built, those were effectively the only processors that you could use. When I had the opportunity to build a neobank, we too had to rely and use one of those processors because there was no alternative, right? So that's kind of the state of the business. Now, when it comes to crypto, since you invested in Bitso and I see Arnoldo here, it's a whole different story. And Pomelo probably has something like 70% market share within crypto cards in Latin America, because all those cards were issued in the last year or 18 months. And we had perfect timing, because now all these players had a new different option, a new different alternative, and they could rely on Pomelo to do the same thing that, the fintechs had to do, but in a much more efficient way. And that's been a terrific opportunity for us. And even though now, crypto is, going through the winter plus the downturn and scrutiny and all of that, in Latin America, it's amazing to see all these use cases that will literally be all over the world. But because of the structural problems that we have, people in Latin America get creative, companies get creative in LATAM. We are the first ones to sort of understand what the use case is, and then it goes mainstream. Just to give you an example, in countries with high inflation, such as Argentina, you have young professionals, maybe 22, 23, 24 years old. They get their first job. They get paid once a month. And on that very same day, they wire the money out of the bank into the crypto wallet, and they buy stable coins. And effectively, that's a hedge against the local currency, but those are digital dollars with a yield, right? And historically in Latin America, we have saved money in dollars and, put them in a safe box or under the mattress or whatever that may be. So we used to save in dollars. Now we're saving in digital dollars with a yield, and sometimes even with a cashback, because all these exchanges are powering their users with cards powered by Pomelo, and then they have 1-2% cashback. So all of a sudden, it's a much more efficient way to save money while hedging yourself against the local problems, right? And this is going to be all over the world very soon, right? And there was a case to, do it in Turkey, because Turkey too had double-digit inflation. But now there's a case to do it all over the world, because there's 6, 7, 8% inflation, right? And so these use cases were born in Latin America, and they're being exported as we speak to the entire world.
Yeah, no, totally agree. And we've seen that, to your point on, and we can talk about crypto in a different context, but definitely sort of when you see the opportunities and the problems that it's solving for Latin America, I think what you're saying makes a ton of sense. I could continue to talk fintech and fintech trends, but I'd love to maybe take it back a step back to the entrepreneurship piece within Latin America, and maybe just hear from your perspective, what it's like to build a business now in Latin America. And I think, we've definitely seen the changes over the years. I think there's been a lot of positive changes. Obviously the last 2 years have seen tons of capital kind of coming externally. Maybe that will change, within the current context, but I do think it's shifted in terms of, what it's like to start a business. And so I'm just curious, to hear a little bit more around, maybe for those that are looking to start a business or who would be curious about becoming an entrepreneur, what are the challenges that you still see for this to really become, a massive kind of career opportunity, and what it's like for you, what it's been like for you?
Yeah, well, there's at least, 4 or 5 core points, I think. Well, first of all, I think we now have an industry and we now have an ecosystem that's been in the making for about, 25 years or so. I think part of that ecosystem is having, venture capital firms operating in the region. During the last, 3 to 4 years, we've seen a lot that came in and, they wanted to sort of expand a little bit their scope and started to invest a little bit in Latin America. Some of them, left and will probably never be back, while others, are staying. But I think as we think of, QED and several others that have been operating for over a decade, that's already that's a structural part of it, because you guys are backing the best companies in the region. But you're doing it because not in an opportunistic way, but you're doing it because you've been through an entire cycles in Latin America, and you know what it means, to go through a cycle in Latin America, which is different from going in a cycle in many other parts around the world. So that's absolutely necessary, because there's probably as you know, here from the US and all over the world, there's no relevant tech companies that can be game changers if there's no venture capital industry, right? So I think that's the first thing. It's a must. The same way, we now have had waves of successful entrepreneurs that are pouring money back in the region, but are also staying in the region, are coaching new founders, and so on and so forth. So anyways, the entire sort of ecosystem. That's the first thing. Secondly, I think we have now tailwinds. I think in relative terms, Latin America is now in a much better position than it was, in past decades. If we see the new sort of world order, the relative importance of Latin America for the future of the world is much more significant. I had the opportunity to go to the World Economic Forum in Davos in January, and that was kind of one of my key takeaways. It's absolutely clear, right? The strategic importance of Latin America for the world, from a food security perspective, natural resources, the role in global warming and offsetting the carbon footprint, and so on and so forth. I think it's going to be of critical importance. And if we play it, intelligently, we can partner with different sort of blocks from around the world in different ways, and really lift the importance of Latin America. So I think that's something that is going to be important and make a difference in the future. And ties back to the previous point, right? All these global funds need to make their decisions, right? And now, it's every investment that you do outside of your core market is a statement, right? And has sort of implications beyond, the investment per se, because you're also making a statement based on the world order, right? And I think more capital will be poured to Latin America, maybe not this year, but in the next 5 or 10 years, I'm absolutely certain about that. So that's kind of the second one. The third one is, I think there's an asymmetric opportunity, the size of the pain and the size of the problems that we have compared to the competition. Mm-hmm. Trying to tackle them is simply asymmetric. Here in the US, you see a new business model, popping up, and then within 2 months you have 20 competitors, right? In Latin America, you may have 3 or 4, right? So, provided that the sort of the infrastructure and the ecosystem is in place, the chances for good founders to actually build good businesses, I think it's higher, right? So that's the other one. And then, we're talking about a massive region. People don't realize that we have twice the population of the US. We have 2 times the GDP of India or Southeast Asia, right? Half the GDP of China. And I think this has been sort of underestimated thus far. And yes, we still have a lot of challenges. From an admin perspective, it's a real nightmare. Also, the fact that there's so many countries adds a lot of complexity. And when it comes to regulated industries such as financial services, there's many times where you have to have 2 legal entities per market, one that's regulated, one that's not, and then maybe if you are operating 5 or 6 markets, then all of a sudden you have 10 or 12 or 15 legal entities, right? Being regulated in different ways by different central banks or different players, and so on and so forth. So that's a lot of admin, right? Think of taxes, payroll, just paperwork in general. So that has not improved that much. Yeah. So that's challenging. And then I think the other point to be mentioned is around talent. I think there's also like big asymmetries with talent. Assuming that obviously like startups, it's hard for startups to be able to tap into like real sort of world-class talent from the get-go. I think we have been very fortunate at Pomelo, based on our experiences and track records. 90% of the people that work at Pomelo have built the most significant fintechs in the region, and that's been game changer for us, and the market has appreciated that. But the average startup, has a little bit sort of more challenges and difficulties tapping into talent. Having said that, Latin America has amazing talent. Even though we are now in a global market, there's still a little bit of an arbitrage when it comes to like salaries, because yes, global companies are trying to hire, from LATAM and save money because it's obviously less expensive than hiring people in Miami or SF or New York or London. But when people want to stay in Latin America and they don't have to pay for housing in the US or in Europe, and they don't have to pay for food in more mature markets, and they don't have to pay for gas in more mature markets, and so on and so forth. You find all these equations where you can tap into amazing talent for a reasonable sort of amount of money. And so you can build a company with a very talented team and with a decent sort of cost structure, right? And so that's why we see that maybe Series A companies in the US have 30 people and Series A companies in Latin America have 100 people, right? And that's a lot more muscle, right? And in many, many ways, the talent, has no big differences, right? Having said that, in LATAM, it's absolutely critical to find talent, but to give them a framework, right? Many times what we don't have in LATAM is the framework to manage the talent correctly. It's like with the World Cup, right? Argentina used to lose against Germany every single World Cup, and we finally had a good coach with a framework, and so he was able to manage talent with a good framework, and we're now world champions.
You have to find a way to bring that into the conversation.
Yeah, of course, and we will continue to do so for the next 4 years. But it's about talent plus framework. When framework here, it's a given, right? In LATAM, it's not. So I think when you manage to lead a company that has talent and has a framework, your chances of succeeding are orders of magnitude larger.
Yeah, no, I totally agree. And I think, you guys have done an amazing job of recruiting talent. I don't know the exact number, but I think you're around 300 people right now in the 2 years that you've been around, and high quality talent, to your point, which to me, what that also has indicated is a little bit of, there is this desire from, this highly talented people to work on, at startups, to work on real problems, to try to find solutions for the region, which I think is, to your point, because of these opportunities that still exist, right? Because of these problems that still need to be solved. And so I think a little bit is also, there's a cultural challenge in the sense of, the risk that you're willing to take with your career. Kind of, I think in the US, there's a lot more of this culture of failure is accepted. I think in Latin America, we still have a fear of failure. And so I do think there's some cultural challenges that hopefully with more entrepreneurs and more startups and more success cases, we can start to break through, and also generational, I think will likely be part of it, but we hopefully start to break through some of those challenges as well, to really, I think, unlock the potential of the talent in LATAM.
No, I agree. And you can actually see that very clearly with stock options, right? As you know, startups try to compensate people with, like a decent enough salary and then stock options so that you get your exposure. And then if the company is successful, then you have an asymmetric sort of return on your time. But people simply don't understand stock options, or they simply don't value them, right? Again, it goes back to, hey, there's usually this mindset that, we need to maximize the salary at any given time because salaries, for most people are not sort of enough, or they do not allow you to make like a big step change in your life. And so to the extent that you can have like a good job that makes you happy, but also maximizes your salary, then those are the questions that people are looking for. And it's very hard to explain to people that they can have an amazing experience, maybe earn 20% less, and potentially have an asymmetric return on their time. And they simply don't get it, right? It's like, okay, but it's not liquid, and it may not be liquid for 5 years or 10 years, and it may be worth zero. Yes, but it may be worth a lot, and there's this and this and this example. Yeah, but today it's not liquid. And it's a fair point, right? It's a fair point, but it speaks to what AC is saying, right? There's we are behind in that respect, right? And it takes a lot of effort, a lot of education, and you end up losing people along the way because someone comes and offers them a much higher salary because they're paying out of a more mature market, and sometimes they don't even think about it, right? Like and 2 or 3 years later, you see people that have sort of derailed their careers, or they get frustrated, or whatever that may be. But I think that's a very clear example of sort of the maturity that we still have to, or the sort of the maturity that we have to develop as an ecosystem. But yeah, I mean, I think slowly but surely we're getting there, and we're seeing more of these very successful companies that are showing like real examples, right? Of how can that be like a game changer. To that point, I think if you look at the tech industry's market share over the entire sort of market cap within Latin America. So in other words, if you look at sort of the stock exchanges or the Latin American public companies and what percentage of those are tech companies, it's only like 1 or 2%. I think in the US is, I don't know, 40%, 50%, whatever that may be. So we're still living like in countries where the traditional industries are sort of the default and the standard, and those are the ones that are able to pay better salaries or give you like more benefits, right? So yeah, it's part of the development and the maturity of the ecosystem.
Yeah, for sure. No, I agree. I mean, I think to your point, the elements are there in terms of the importance of Latin America, the problems that need to be solved. We're obviously still behind in terms of as an ecosystem, but I do think we're going to get there, right? And I think it's a matter of time, it's a matter of repetition, it's a matter of success cases that will ultimately kind of help get us there. Great. So I know we're coming up on time, so I would love to wrap up maybe with just a what's next for Pomelo. And if we're sitting here in 3-4 years looking back at where Pomelo is, what's the vision and sort of the hope for the future of the company?
Yeah. So I mean, as I said, I think when it comes to infrastructure, it will really take like 2 to 3 decades to build a relevant company that really changes the nature of how things are being done. Even like think of in Argentina, we're very proud of Mercado Libre, of course, and they're 25 years old or so, right? And we only have like 3% e-commerce penetration or something.
Yeah.
So they can, in many ways, they were the ones that inspired sort of the entire community of tech entrepreneurs, and arguably they are still very early, in that journey. So it's going to be kind of a similar thing, right? It will take like 2 to 3 decades. So the way we think about it is, we need to, Latin America has to go through this sort of renovation where we introduce this new infrastructure for existing and also for new financial services, because more and more use cases will come. That sort of renovation will take decades because all these companies have to migrate away from the legacy infrastructure into the new one, and then the new sort of market share, if you want, will be built on top of the new one, right? So what's the vision? The vision is that, in the future, Pomelo is, it's just powering this new financial services industry, right? And no one will see it, no one will even notice, but we'll be there, like in sitting behind all the services. It's like the same as with cloud, right? Like, the entire internet industry is now based on and built on top of cloud infrastructure, or most of it. And you don't see it, but it's there, right? And I think those are the most powerful businesses. And I think there's opportunities to do that in different sort of verticals within LATAM, with fintech being one. But then, the same is true for education, the same is true for healthcare, and many others. So, yeah, that's kind of the vision. And so, these card issuing processing services and products that we have built were the wedge in, and where we saw like the low hanging opportunity and the clear sort of market need in the short term. But then, infrastructure is like a whole different beast. It's much bigger. And so we need to start sort of getting into all those different sort of areas of infrastructure, as well as serving more markets, right? The pain was big with the large markets. It's much bigger with the smaller markets, because it's hard to justify, the incremental, the marginal cost of serving like the 10th economy in Latin America, when the marginal sort of benefit of doing that is relatively slow. So it's or small, sorry. So it's down to us to find sort of more scalable ways to go from like 6 markets to 20 markets, because it's part of the vision. But from an economic standpoint, you have to find those formulas that allow you to untap all those markets in a cost efficient way.
Yep. No, that makes a lot of sense. Well, we're certainly excited to see to be a part of the journey for the next couple decades, and see what Pomelo can do in transforming the region. So I think we can kind of wrap up with that, and we'll move on to questions. But thanks again to the audience, both in person and virtually, for joining us. And hopefully you can now have a better idea of the talent and the type of companies that are being built by the next generation of entrepreneurs. So thank you.